FedEx shares are trading higher this morning. The delivery giant reporting stronger than expected profit as it continues cost-cutting efforts. Revenue fell just shy of estimates. Company also raising its full-year forecast. Joining us now is Helane Becker, TD Cowen, managing director. And whenever we get into a point in this world where cost-cutting helps companies make the numbers, it's not great, but I guess we can embrace it to some extent, Helane. I mean, the revenue is slightly below. I guess they pass along increased fuel costs, so that's not a problem. But would you characterize it as a good quarter?
Yes, actually. So I've been covering the company for a long time, Joe, and most of the time they've missed and the stock's gone down. And this time they kind of beat on the bottom line. A lot of it has to do with the cost cutting, as you just pointed out. Some of it on the top line that was a little better than expected, which was in ground, had to do with the UPS potential strike. So they picked up some accounts, probably 600,000 packages a night in July, and then they also picked up some freight from yellow freight. Not all the yellow freight was good freight, right? A lot of it was low margin business, but FedEx delivers a good value proposition, and so they were able to win a bunch of customers based on their service record.
It's kind of interesting the things you're pointing out, Helane. So they were able to benefit from some of the other issues at competitors, but there, but for the grace of God, I mean, are we in an environment where it's going to happen? Are they next in line eventually?
You know, that's a good question. So here's how we think about it. In 2020 and 2021, they talked about pulling volume forward from 2025 and later. So they because of the pandemic, they sort of fast forwarded growth. And then we came into 2022, and this year, as things started to reopen, growth slowed because people are going back to stores as opposed to ordering everything online. And so we've seen these huge declines in cargo volume. I think the fourth quarter of last year in general, cargo was down 14.2%. So we're coming into a period of time where we're not going to necessarily have a great peak, but where the comps look a lot better. And so I think for them, a lot of the negative issues were in let's see, this is fiscal 24, so we're in fiscal 21 and fiscal 22, and this year, fiscal 23. So as we go forward, things should actually start to look a little better. But Joe, they did $90 billion in revenue in 2023's fiscal year. They're on a May fiscal. We think getting that last 10 billion kind of to 100 billion is going to be really difficult, and probably not until the second half of the decade, because the revenue growth has slowed a little bit.
But are we at peak margins? Because I was actually alluding to whether they're going to have labor issues. What is? We've seen that number at UPS, 160 grand a year. Is that a real number? And what's the disparity between FedEx and some of its competitors there? Yeah,
so the real number includes benefits. So
right.
It's not necessarily, I think the average driver pay is actually closer to 85 or 90,000, and then you add all those great benefits that UPS offers. So for FedEx, they only have pilots that are unionized, and I think you guys reported a few weeks or so ago that the pilots rejected a contract, which kind of surprised me because it looked like a really good contract, and FedEx is shrinking Express and shrinking the air operation. But on the labor issue, they're not unionized. They use a lot of independent contractors, and because of that, they tend to pay industry standard wages. So and I think they mentioned yesterday that on October 1st, they're giving another wage increase. So they're catching up, but because they're non-union, they have a little bit of a different footprint than UPS would have.
Meaning what for which stock you'd recommend?
Oh, so thanks, Becky. We have an outperform on FedEx and a market perform on UPS. We basically think that margins at UPS are going to be under pressure, at least for the second half of this year. And then FedEx, we don't, as I just said, we don't see that same margin pressure. We have a $280 price target on FedEx.
I'm not going to just say, wow, you like the union shop and don't like the non-union shop, but that kind of, I mean, margin pressure, all the things I'm not going to connect those dots. I don't want to get canceled by anyone, but Helane, thank you.